Welcome back. My guest is joining me right now, Wilson Erumebor, who is the senior economist with the Nigerian Economic Summit Group. Hello, Wilson, and thank you for joining me today. Hi, Wilson. Can you hear me?
Hello, Nancy. Thank you for having me.
Okay, yes.
Yes, I can hear you. Thank you for having me.
Thank you for showing up. Let's get started. You know, out of all the economic numbers that you've seen, and out of all the economic happenings, which one really resonates with you? Yes, which one are you keenly watching?
Well, it's quite difficult to choose which one because the way the economy works, as one indicator moves, it also affects the other. But recently have been tilting towards trade, import and export, because of course we've been having significant FX issues. There are issues around closure of the borders, the issue relating to inflation, the fact that we've been seeing consistent increase in prices. So trade is one key area, and even more importantly, because if you look at many of the countries that are getting out of recovery in the midst of this pandemic, you would notice a consistent factor. The fact that they've also emphasized on improving exports. They've also emphasized on improving production for exports. I mean, there are some that target the export market alone. So trade is very important, but then inflation, GDP, and a whole lot of other indicators are also crucial if we're talking about getting back to recovery.
Okay, since you've raised the issue of trade and that's what you're looking at, let's stick with it a bit, because the National Bureau of Statistics released trade numbers, and it did show us that our trade deficit has widened by about 2.38 trillion naira, if I'm not mistaken, and that's the highest we've seen at least in the last 3 years or so, since 2017. If you take a look at those trade numbers, we're seeing about 23 trillion or so, but very instructive to note that we imported a lot more than we exported. And the things we exported also include crude, I think wheat, and what else? No, the things we exported, yes, crude. So what's for you, what were the things that were not right with those numbers?
Okay, first of all, like you mentioned, the fact that we had a trade deficit of, minus, I think about 2.2 trillion, like you said, is worrisome. What that means is that we imported more than what we exported. So that, I mean, export accounted for, I think, about 34% of what we of total trade, and import accounted for the remaining 66% or thereabout. So that means that there's so much pressure for us to demand for dollars, and then our earnings from dollars is reduced, because when you import more, it means you demand for dollars. When you export more, it means you earn dollars. So that in itself is worrisome. But even more challenging is the fact that even in the midst of a pandemic where we've seen significant decline in crude oil price. At some point, it got to $9 per barrel. We've seen the fact that output has been challenged. But even at that, crude oil exports still accounted for 81% of what we exported. So what that means is, if even with the challenges in the sector, oil still dominates Nigeria's exports. And when you then add other oil-related products, that figure increases to 93%. So it still tells us that we are still, tilting towards crude oil. We've not, thought of ways to expand the non-oil sector, to grow businesses that engage in non-oil exports, to grow industries that can export goods and earn foreign exchange into the economy. And until we do that, in addition to attracting foreign investment into the country, making the business environment friendly, stopping all these policy inconsistency issues and all that, until we do both of these, we will keep having FX issues, no matter how much we try to manage and control and do that. So I think it's even more troubling. If you also look at the numbers, you'd see that out of what we exported, in the third quarter, manufacturing goods or manufactured goods only accounted for 4.4% of what we exported. Agricultural goods, just 2%. Imports, we spent about 1.3 trillion importing live animals and other animal products and vegetable products into the country. So we are still moving, treading a fragile economy, such that even if anything happens to crude oil now, we are in trouble. So we don't have anything relating to building. We are not doing much in terms of building economic resilience. And there's no way you can have an healthy economy if you don't build economic resilience.
You know, Wilson, as you're talking, what was coming to my mind is that with everything that government says it is doing in terms of diversification of Nigeria's earnings, these trade numbers aren't telling us that. You just mentioned, of course, 81% of our exports oil. But the very interesting thing is that what we imported also, I think the three things we imported into the country, petrol, used vehicles, as well as, what else again, I think wheat also. So where does it really leave us with the diversification story of the federal government, with the interventions so far, even from the Central Bank of Nigeria? Because the agricultural exports, we saw a decline in agricultural exports.
Yes. So one key thing, and it's across different governments, different administrations, and when you look at Nigeria, one thing is very clear, that most times what we think are the problems, so our diagnostics and our interventions don't really match. So we're always fond of throwing money at sectors or throwing money at problems. So virtually almost all the sectors, whether you're talking about agriculture, manufacturing, and coal, you would see one or two intervention funds to, give out to business. But I think what we need to do in the real sense is to address the issues relating to the policy environment, issues relating to infrastructure. No one would bring in $1 billion, into an economy that you are not sure as to whether there would be a reversal of policy and your money goes away. So we have not a mechanism to address that. We've even seen cases where these are leased out, by a certain agency, and another government agency is saying, we don't even know how that came about. We don't know the motive behind that. And investment don't only look at potential. Investment looks at the environment in which the business would operate. So I think we need to go beyond, having funds. We must begin to emphasize and see the importance of private capital. Private capital does not only mean bringing money into an economy. That private investment and that private money comes with a lot of things like skills development, innovation, technology, because you're simply looking at ways to improve output and become competitive. So until we do that, I think we'll be, going around throwing money at problems, at sectors, and thinking they would solve the problems. They won't. And we must, at the other end, start to think of key areas. We must begin to prioritize. I mean, look at the Abu Dhabi, for instance. I was reading, several reports in the course of a job and a work I'm doing, and we're seeing like non-oil exports in Abu Dhabi grew by 62%, in the third quarter amidst this pandemic, and that's even an oil-rich country. The UAE is one of the, a major oil producer. Nigeria's GDP is even larger than that of the UAE. We've seen countries like, Rwanda, for instance. We've seen countries like India. Rwanda, as an example, gave, like a tax holiday, a 7-year tax holiday to corporates. If you are bringing above $50 million into the economy, you would, be able to partake in that incentive. In India, yesterday they won the award by the UN as one of the most efficient agencies that have promoted investment even in the midst of the pandemic. They called it Invest India. So these are initiatives that countries that are serious about development, serious about investment, that understand the importance of private capital. These are what they are doing to attract private capital into industries. So I think we need to start looking at that direction, as to always thinking that money would solve all the problems in the economy.
Wilson, let's talk about the border reopening, which we just have about 3 weeks to the beginning the takeoff of African Continental Free Trade Area. Are you seeing a readiness on our part that we will join? When I mean join, of course, we're part of it, that we may be part of this single market. I don't think it's going to be the biggest anymore in the world, because the regional the Regional Comprehensive Economic Partnership, that's the RCEP, China and other 15 Asian countries, not Asian countries, China and 15 other countries have also signed. So we're saying that that may be the biggest market in the world. But if you're looking at what AFTA will do from January 1, are you seeing a readiness on our part? Our borders are still closed. And we're even talking about trade earlier. Were we trading when the borders were closed?
Well, yeah, we were trading before the borders closed. Because if you look at no, in fairness, if you in reality, if you look at the trade numbers, like you mentioned, we've seen a consistent 4-quarter decline, 4-quarter negative trade balance. What that means, trade deficit. So it started from the last quarter of 2019. Last quarter, of course, includes October, November, December. And that was, after we implemented the border closure. So the numbers, show what happens. I think what we've done is basically to underestimate the importance of the land borders itself and how it contributes to the economy. Yes, there are arguments that a lot of informal trade goes on and all that, but even at that feeds back into production. You can't produce if you don't, you can't export if you don't produce, except you bring in and you re-export. But majorly, some of these goods are produced, in Aba, are produced in Kano, textiles and all that. Nigeria, if you pay a visit to the Aba market, you see how much potential exists in that market and how Nigeria feeds a lot of some of these neighboring West African countries with things like bags, shoes, and all that. And I think that's just a glimpse of what the AFCFTA holds when it comes to improving trade, when it comes to improving business performance, when it comes to improving production. And this also translates to things like income and poverty, income increase and poverty reduction. So I think, yes, AFCFTA, no doubt, everyone agrees, it has a lot of potential. It has a lot of, it would increase intra-African trade. It can even lead to a lot of things like, industrialization of countries within the continent and all that. But I think, are we really ready? Because, from the signals we're getting, yes, there's a lot of consultation going on. Nigeria ratified the agreement. We're trying to have different consultations, but it's not just about consultation. It's about getting your act and, making the right decisions that you need to. I mean, recently someone said there's a thing of infant industry argument that Nigeria would have to, if we open our borders, import would come in. And I said to myself, Nigeria has been arguing about infant industry since the 70s, since the 80s. We've been saying infant industry. Don't infant industries grow? Like, there should be a time that you've said, look, we've done this, we've put these in place. This is now time for Nigeria to feed the whole of Africa. When you travel around Africa, and I've had the opportunity to visit a couple of African countries, you see how much they rely so much on import from outside the continent, import from China, import from different countries, even from Europe, from France and all that. And I think for Nigeria, we have that potential, we have that might to be able to, feed the whole of Africa, if and only if we are serious about getting businesses to work, improving productivity, looking at key sectors that we think are crucial for exports. I mean, I can give you a list of a number of sectors. We've written, several reports have been written on those sectors, but I think what is left to be done is actually action by particularly the policymakers to attract investment into these sectors and then get them to grow and export. Okay. So the potential is there, but from all the signs, we still have a lot of work to do to be ready.
Wilson, let's talk about rising food prices, or let's talk about inflation, rising inflation in the country. There was something I said on the program, I think was it 2 weeks back, or, I've always said it even several times. the rise of the sachet economy in the country. You see that a lot of brands are going economical right now in terms of their products. They do the mini or the economical sizes of even detergents, milk, vegetable oil, and all of that. What does it really say for our country and the purchasing power? Because when we say, okay, these companies are going this route so that Nigerians can afford it, even those sachet products are no longer affordable. For example, the sachet tomatoes that used to be bought like 50 naira before, you go to the market right now is 150. You know, so how would you really analyze that? Are we really nosediving that fast?
Well, for inflation, we often say that inflation is the disease of the poor and low income earners, because if you look at, since August, and I don't even want to limit this to August, since, whether it's, a couple of years back, inflation has, been increasing, significantly. It became more pronounced after the border closure in August 2019. But yes, prices of goods, have increased and remain high, for the most part of the last decade. And what that means, if you then look at income levels of families, income levels of households, of individuals, we are, from the numbers and from what we show, we are not seeing a commensurate increase in income, in relation to increase in prices. So what that means is that if you look at the real expenditure of households, real expenditure of individuals, that in itself is dropping, because as goods become more expensive, it becomes more difficult for a large number of people to buy these goods. And of course, you remember that a large percentage, about 40% of Nigerians live below the national poverty line. And that means we're talking about 135,000 naira in, many people can't even earn up to that, spend up to that in a year. So that tells you the gravity of the situation and the fact that, this price increase affects majority of Nigerians, when it comes to if you look at real income. And one key way, and if you look at the numbers, you would see that food inflation is one of the biggest area that accounts for the general increase in inflation. As at the last numbers were about, I think, 17.3%, in terms of food inflation. And even more worrying is the fact that it's not just about increase in prices. Now we've seen scarcity of certain, food commodities or even non-food items as well. So there are issues relating to the exchange rate, the fact that, exchange rate keeps depreciating in the parallel market, and that feeds, directly into inflation, because we rely a lot on imports. And when you look at the data, manufactured goods account for 65% of what we import into the country. So there's a direct, transmission of that exchange rate depreciation into the prices of goods in the country. So that said, I think what we then need to do is to look at the agricultural space and think of how we can begin to improve productivity. That's on one leg. On the other leg are issues relating to security. So more recently, we've been seeing, several, whether it's the bandits and all that, attacking farmers and all that. That in itself had a very huge impact in price increase. Some commodities, I don't know if you followed the market. Onions, for instance, has become, a gold, has become scarce.
Wilson, I follow the market now. In fact, I buy it too. So it's not
Yes.
I buy onions, and I've been saying it on the show. If I like what Nigerians really think, they say now onions is the new gold because it's expensive. And we're seeing insecurity casting a shadow on the economy. Are you? Yeah. Okay, just hold on a bit and let me put this, because President Buhari is also to address the joint session of the National Assembly on insecurity issues. Do you see that bringing a kind of hope on the shadow that insecurity has really cast on our economy in the last few years? It's not easy. We are now in the festive season. Some people are not confident enough to travel by road. Even if you're in your house, you are not even confident enough to sleep with your two eyes closed.
I think that meeting is long overdue. We should have had that meeting 2-3 years ago. Not just now. We should, and it's not just about having meetings. It's also about, being proactive. equipping the relevant agencies to be able to tackle some of these issues. So what that happens is we've seen cases where there are no-go areas or areas where if you go to your own risk. And that in itself has an implication on the quantum of investment we attract into the country. If investment or investors don't feel safe, they'd rather go to another country because
okay, it seems we lost.
Is not working.
Okay, Wilson, are you still there? Because we couldn't hear you anymore. We lost a bit of the connection. Let's talk now about the future. And as we head into 2021, are you underweight? Are you overweight on the Nigerian economy moving forward? And which one, if you choose any of those, what are your thoughts on why you choose any of underweight or overweight? For me, I really don't even know where I am.
Well, because as economists, they're saying that if economics would always say on the one hand and on the other hand, there's no economics there's no economist that has one hand. So we have two hands. So in terms of what the outlook for next year, I think that yes, personally I'm an optimistic person, but economics teaches you to be to face the reality. So I think yes, we might improve. And am I being heard?
Yes, you're ahead. Go ahead.
Okay. Yeah. So yes, we can. Our forecast can for growth. We can get out of the recession. We can record some positive growth next year if there are no disruptions. Because as it was in 2019, many people didn't see something like COVID coming to disrupt activities and supply chains and all that. So if things continue at this momentum, yes, we might see a positive growth in GDP, maybe sometime next year. But that said, GDP is not only the indicator that you use to measure the performance of the economy. Other indicators, unemployment, inflation, and all that are usually, and poverty and the likes, are usually very sticky when it comes to adjusting or moving in line with GDP, because over the years we've seen such weak linkages between unemployment in particular and poverty, and between the linkage of both indicators and GDP. So yes, the economy in terms of production, we might see increase in production over time, and by next year we could be out of the recession. But there's also an issue of the quality of growth that we would have. It's not just about growing for growing's sake and having having a +1% growth and we're excited. It's also about the sectors that contribute to this growth. Are we moving back to an era of oil price-led growth, or are we moving into a new era where we've said these are the new sectors and these sectors will drive growth, and these sectors have very strong linkages with employment. These sectors have strong linkages with reducing poverty. So it's not just about growing the numbers. It's also about the quality of growth that we have in 2020. And I think that's where our policymakers need to pay attention to and determine and come up with a blueprint that says these are the areas that we think we can leverage on technology to improve productivity, to employ people, and to export, to the rest of the world. So would I say I'm more on the bright side if our policymakers can understand the potential of the economy, understand the importance of private capital, and are ready to make the necessary reforms that would move Nigeria forward. So
in other words, you're cautiously overweight on the Nigerian economy.
Absolutely.
How do you see the positive COVID-19 vaccine news, perhaps an acceleration of the prices of crude oil at this time? What else again is there that is positive? Okay, U.S. elections, January 20 or so, we hope that a new person, Joe Biden, will be the president of the U.S., even though some Trump supporters are against that. But whatever, like I always say, it's America, so they will solve their own problems. Let's also solve our own problems here. So a bit of positivity coming on the back of all that. Do you see that filtering into our economy?
Yes, for oil price, yes, but I'm not quite sure if oil price we would get back to the era of, where we're doing $80, $90 per barrel. So this new normal has come to stay. The fact that there's a huge supply glut in the market, so many oil producers, are even waiting to push out supply of crude into the market. So that in itself would mean that yes, oil price might increase, but it would still stay, around that $40 to $50 per barrel, and maybe just a little above $50. It's good news for Nigeria in one hand. It's sad news on the other hand. Why? Because sometimes when you are broke, when you are broke and when you don't have money, it makes you to think of innovative ways to generate income, and you think of other sources to generate income. And
are we doing that thinking already? Are you saying that thinking done? Because this is not the first time we've gone broke, And
yes,
are we doing that thinking already? Because even the trade numbers tell us a whole lot of story and some other numbers around.
Yes, I don't think we're doing enough, to be honest. I think we're doing a lot of, there's a lot of, whether it's paperwork, there's a lot of planning going on and all that. But how much of that would how much of that would be translated into impact? How much of that are we going to act on? So there's a whole aspect of, wanting to do something, and there's a whole aspect of doing it, taking the right decisions, leasing out all the relevant policy pronouncements, following them up, and those are the things that actually translate into improved numbers. So until we start doing that, and I don't think we're doing that as much as we should, there's a whole lot of planning going on right now. Several committees looking at the 2050 vision for Nigeria, the long-term planning agenda, and all that. There's several teams looking at the next 5 years and all that. So yes, it's good to plan, no doubt. I mean, I made a presentation at the summit last year, that started some of these initiatives, creating 3 different scenarios for Nigeria by 2050, and which of the path would adopt. So it's welcome, the fact that we're looking at this, but there's another leg of implementation, getting the political will. For instance, I would have preferred a case where, many of our states, I think our states governors have a very key role to play, particularly in addressing some of these issues we've spoken about, whether it's unemployment, poverty, and all that.
Okay, I think, Wilson, will leave it at that. Many thanks for your time today, and let's really see what the future holds, if we will really come out of this recession in an elegant manner. Yesterday, South Africa exited the recession, but it's not a hurry yet, even for South Africa. So let's see how we will gallantly, like the soldiers do, get out of this recession, whether it's this quarter or next quarter. Thank you very much, Wilson, for your time.
Thank you for having me.
All right. I've been speaking with Wilson Erumebor, who is the senior economist at Nigerian Economic Summit Group. It's time right now. Let's quickly take you through what the central bank governor did say last week concerning the diaspora remittances, that you can get your remittances across the counter at the banks in foreign currency. So another CBN weekly segment. Let's quickly take you through that, and I think that's my bye-bye for today. I'll see you all again tomorrow, God willing. Be the best you can be the change you want to see. I am Nancy Naji.